Are you looking for information about the $100 down FHA home loan program?
For most people trying to buy a home, let's be real, the biggest hurdle isn't usually the monthly payment. It's that giant pile of cash you need for the down payment. Saving up tens of thousands of dollars can feel absolutely impossible. But what if I told you that for some folks, that barrier to entry isn't nearly so high?
Yeah, look at that. $100. For certain homes and for certain buyers, this is it. That's all it takes to get the keys. I know what you're thinking. No way. It sounds like a total gimmick, right? Just too good to be true.
So the real question is, could this actually work for you? Well, that's exactly what we're going to break down right now. We're going to dig into the program, figure out who qualifies, and expose what the real catch is. Okay, a $100 down payment sounds unbelievable. I get it. And honestly, a healthy dose of skepticism is a good thing here. But this isn't some late-night infomercial promising you the moon. This is a real, honest-to-goodness, government-backed program.
It's officially called the FHA $100 down payment program, and really, you should think of it as a sales incentive. Now, the two phrases you have to lock on to are specific type of property and FHA-insured financing. This is so important. It's not for any old house on the market. It's a very specific tool designed to sell a very particular category of homes.
So here it is. This is where we get to the fine print, the catch. And it's not some hidden fee or a crazy interest rate. The catch is the house itself. You can't use this program on just any home listed for sale. You have to buy what's known as a HUD home.
And what on earth is a HUD home? Well, it's what the industry calls an REO property, which just stands for real estate owned. Here's the backstory. Someone bought the house with a government-insured FHA loan, but then they couldn't make the payments, and the house went into foreclosure. So now the government, specifically the Department of Housing and Urban Development, or HUD, literally owns this house and is trying to sell it.
Now you have to understand, buying a HUD home is a completely different ballgame. You're not sitting across the table negotiating with a homeowner. Nope, you're placing bids in a government-run process. And here's the most critical part. These homes are sold strictly as is. And when the government says as is, they mean it. They will make zero repairs. No warranties. That leaky faucet, the questionable wiring, it all becomes your problem the second they hand you the keys.
You know, a mortgage lender from one of our sources put it perfectly. They said with a HUD home, you could find a diamond in the rough or fool's gold. And that just nails it, doesn't it? It could be an incredible opportunity, or it could be a total money pit. That's why getting a full, thorough home inspection isn't just a good idea. It's absolutely essential to figure out what as is really means for that specific house. So, that whole diamond in the rough or fool's gold idea is key. It's a risk. And because it's a risk that involves a government-backed loan, you better believe they have some pretty specific ideas about who they're willing to make this offer to. So let's dig into what it takes for you, the buyer, to actually qualify.
First things first, the magic number is your credit score. Across the board, lenders require a minimum FICO score of 580 to even be considered for this program. That's the floor. But, and this is a big but, not all scores above 580 are treated equally.
And this is where your score really changes the game. If your score's in that 580 to 640 range, you're eligible, but get ready for your application to go through what's called manual underwriting. That means an actual person, not a computer, is going to meticulously comb through every single detail of your finances. They'll also be way stricter with your debt-to-income ratio, usually capping it at 43%. Now, if you can get your score up above 640, you're much more likely to sail through an automated system, which usually means a little more flexibility. Beyond the credit score, there are some total non-negotiables. This program is only for people who plan to live in the home. It's for owner-occupants, not investors. You have to be a U.S. citizen or a permanent resident. You, of course, have to qualify for the underlying FHA loan itself. And finally, the government checks to make sure you don't have any other federal debt you're behind on, like student loans or back taxes.
Okay, so let's say you meet all those personal requirements, and you've actually found a HUD home you're interested in. Well, there are still a few more hoops to jump through. It's a government program, after all, and there's always a very specific process you have to follow. So here are the steps, and you gotta get these right. First, you can't use just any real estate agent. They have to be specifically registered with HUD. Second, this program is exclusively tied to FHA loans. Third, and this is critical, you or your agent must explicitly write the $100 down incentive into the sales contract. It is not automatic. If you don't ask for it, you don't get it. And finally, because these homes often need work, there's a great option to roll repair costs into your loan using a special FHA 203K mortgage.
And it's not just you who has to qualify. The property itself has to clear a few hurdles. It's got to be a primary residence with 1 or 2 units, so no big multifamily properties. And while some condos might be eligible, a lot of manufactured homes and co-ops are out. But the biggest rule is this: the home has to be deemed insurable by FHA standards. That just means it has to meet basic health and safety requirements. If an appraiser finds issues that make it uninsurable, you're not automatically out. You might just have to set aside funds in a special repair escrow to fix those specific problems right after you close.
Whew, okay, we've covered a lot of ground. The type of house, the credit score, all the rules. So now let's just put it all together and figure out who is the ideal person for this very specialized path to homeownership.
All right, let's run through a quick mental checklist. See if this sounds like you. Number 1, you have a stable income, but saving up a massive down payment just feels like an uphill battle. Number 2, your FICO score is at least 580. 3, and this is a big one, the idea of buying a fixer-upper actually excites you more than it scares you. 4, you're a patient person who can handle a slower, government-run process. And 5, the final reality check, you've actually looked and found an eligible HUD home in your area that's offering this incentive. So here's the ultimate takeaway. The $100 down payment program is not a simple shortcut for everyone. It is a niche opportunity. But for that right buyer, the one who's patient, who's handy, who has a decent credit score but just can't save a giant pile of cash, it can be that one unique doorway that makes owning a home possible when it felt like it never would be.
And that really just leaves us with one last question. It forces you to think about what you're really willing to take on. Are you willing to trade sweat equity and a few weekends of repairs for a dramatically lower barrier to entry? Is the right fixer-upper your key to home ownership? For some people, the answer is a resounding yes.
The $100 down program will require a minimum credit score of 580 with most FHA lenders, but some may want higher credit scores. HUD may contribute up to pay your closing costs and prepaids. Home must FHA insurable, $10,000 max renovation cost. If you have any questions about the HUD FHA $100 down program, reach out today. Call or text me at 502-905-3708. NMLS number 57916. Equal housing lender, not a commitment to lend, and not part of any government agency. To search for current HUD FHA repo homes, click on the link below, or go to www.hudhomestore.gov. Then select Kentucky on the map, and it will pull up current homes. Licensing: Kentucky Mortgage Loan Officer, NMLS Personal ID, 57916. Company NMLS ID, 1,738,461.